It's Tuesday the 28th, I'm FX Blue and this is CurrencyTransfer.com's market update. And the headlines today are that Brexit means Brexit is back in vogue, the US agrees a new trade deal with Mexico, and Rome is asking for more debt flexibility. So there are reports of growing concerns that the government performance in the Brexit negotiation is not good enough. The original battle cry of Brexit means Brexit or no deal is better than a bad deal are being resurrected at the moment to counter fears that to get a deal agreed the UK will make more concessions than it should. This all should come to a head when Brussels gives us their official response to the amended Chequers proposal. An expectation, of course, is for this to be negative, but the market waits to see at the moment. Sterling had started to recover from the weakness based on concerns of a no-deal Brexit, helped, of course, by the dollar correction. However, Brexit infighting starts again, and weakness driven by no-deal fears is likely to return for sterling. With the bank holiday yesterday, cable was driven by dollar weakness to touch 129. We have strong resistance at 129.40 though, which is unlikely to be broken without positivity over any Brexit deal. Meanwhile, stateside, President Trump has beaten Mexico into submission to sign an amended version of NAFTA. NAFTA has been in place since 1994 with Mexico and Canada and has been continually attacked by Trump. His attention will no doubt now shift to Canada, which has refused to discuss any changes to date. Today we have trade data for July, which will keep the US trade deficit in focus. It's expected to have fallen below 69 billion, but anything around the 70 billion mark may well see further rhetoric from the president. The dollar index at the moment has continued lower and is currently around 94.75. Over on the continent, Italy is touching the headlines, calling for a change to regulation over the debt-to-GDP ratio, which is currently well over 132%. Staggering, really. Their budget deficit is a little bit like me when I was at uni. Maxed out on my credit card. Rather than reducing my spending, I got onto Barclaycard to ask for a credit increase. Crazy days on both sides, but worse when you think it's a country involved. But meanwhile, the euro continues to be reactive. Yesterday, euro dollar reached 116.95, but very much like sterling, it's unlikely to break much higher without a major event in its favour. We'll keep you posted through the shortened week. If you've got any questions, please do pop them in the comments below.